Hello and welcome to my channel, the show where we talk about everything related to cryptocurrencies and blockchain technology. In today's video, we're going to talk about Bitcoin, the king of crypto, and why it matters. Let's get started. Bitcoin is the first and most popular cryptocurrency in the world. It was created in 2009 by an anonymous person or group using the pseudonym Satoshi Nakamoto. Bitcoin is a decentralized digital currency that can be sent and received over a peer-to-peer network without the need for intermediaries or central authorities. Bitcoin has been making headlines recently for reaching new all-time highs, surpassing $60,000 per coin in October 2021. But why is Bitcoin so important and valuable? What makes it different from other cryptocurrencies? And why is it still the king of crypto after more than a decade of existence? In this video, we're going to answer these questions and more by looking at 3 reasons why Bitcoin is still the king of crypto and why it matters. Reason number 1, Bitcoin has a strong network effect. One of the main reasons why Bitcoin is still the king of crypto is because of its strong network effect. This means that the more people use and adopt Bitcoin, the more valuable and useful it becomes. Bitcoin has the largest and most secure network of any cryptocurrency. It has millions of users, thousands of nodes, hundreds of exchanges, and dozens of wallets and applications. It also has the highest market capitalization, liquidity, and trading volume of any crypto asset. The size and scale of the Bitcoin network mean that it is incredibly robust and difficult to attack, making it a safe investment for those looking to get involved in cryptocurrencies. It also means that Bitcoin has a high degree of recognition and acceptance around the world, making it easier to use and access for various purposes. Bitcoin's network effect also creates a positive feedback loop that reinforces its dominance. The more people use Bitcoin, the more demand and value it generates, which attracts more users, developers, investors, and innovators, which in turn creates more demand and value, and so on. This makes it hard for any other cryptocurrency to compete with or replace Bitcoin as the leading digital currency. Bitcoin has a first-mover advantage that gives it a strong edge over its rivals. But how can we measure the strength of Bitcoin's network effect? How can we compare it to other networks or products? One way to measure the network effect is to use Metcalfe's law, which states that the value of a network is proportional to the square of the number of its users. This law was originally applied to telephones and computer networks, but it can also be used to estimate the value of social media platforms or cryptocurrencies. According to Metcalfe's law, if we plot the number of users versus the value of a network on a logarithmic scale, we should see a linear relationship with a slope of 2. This means that every time the number of users doubles, the value of the network quadruples. Using this method, some researchers have found that Bitcoin's network value follows Metcalfe's law quite closely, with a slope close to 2. This suggests that Bitcoin's value is largely driven by its network effect and user adoption. However, Metcalfe's law is not perfect and has some limitations. For example, it assumes that all users are equally active and valuable, which may not be true for Bitcoin or other networks. It also does not account for external factors that may affect the value of a network, such as regulation, competition, or innovation. Therefore, Metcalfe's law should be used with caution and is one of many tools to assess the strength of Bitcoin's network effect. Other factors that may indicate Bitcoin's network effect are the number and diversity of developers working on Bitcoin's core protocol or related projects, the number and quality of services and applications built on top of Bitcoin or using its technology, the number and influence of institutions, corporations, governments, and celebrities that support or adopt Bitcoin, the level of innovation and improvement in Bitcoin's technology and functionality, the degree of resilience and adaptation in Bitcoin's community and ecosystem. Reason number 2, Bitcoin is a trusted store of value. Another reason why Bitcoin is still the king of crypto is because it is a trusted store of value. This means that it can preserve its purchasing power over time and protect against inflation and currency devaluation. Bitcoin has a limited supply of 21 million coins that can ever be created. This makes it scarce and deflationary, unlike fiat currencies that can be printed endlessly by central banks. Bitcoin's supply is controlled by an algorithm that reduces the amount of new coins generated every 4 years in a process called halving. This creates a predictable and transparent monetary policy that ensures Bitcoin's long-term value. Bitcoin's scarcity also makes it attractive as a hedge against economic uncertainty and instability. In times of crisis, people tend to flock to safe haven assets that can retain their value and offer protection from market volatility. Bitcoin has proven to be such an asset in recent years, as it has outperformed traditional assets like gold, stocks, bonds, and real estate. Bitcoin's trustworthiness also stems from its decentralization and immutability. Bitcoin is not controlled or manipulated by any central authority or intermediary. It is governed by consensus among its users who validate transactions and secure the network. Bitcoin's transactions are recorded on a public ledger called the blockchain that cannot be altered or erased. This makes Bitcoin transparent and verifiable, ensuring its integrity and reliability. But what makes Bitcoin a better store of value than other assets? How does it compare to fiat currencies, gold, or other cryptocurrencies? One way to answer this question is to look at the characteristics of a good store of value. According to CoinTree, a good store of value should have the following properties. Durability: it should not degrade over time or lose its functionality. Portability: it should be easy to carry and transfer across borders and distances. Divisibility: it should be able to be divided into smaller units without losing value. Scarcity: it should have a limited supply or be difficult to produce or obtain. Acceptability: it should be widely recognized and accepted as a medium of exchange. Fungibility: it should be interchangeable with other units of the same asset without losing value. Based on these criteria, Bitcoin has a clear advantage over most other assets as a store of value. Let's see how it stacks up against some of the most common ones. First, fiat currencies. Fiat currencies are durable, portable, divisible, acceptable, and fungible, but they are not scarce. Central banks can print more money at will, causing inflation and devaluation. Fiat currencies also depend on the trust and stability of the issuing governments, which can be eroded by political or economic turmoil. Secondly, gold. Gold is durable, scarce, acceptable, and somewhat fungible, but it is not very portable or divisible. Gold is heavy and bulky, making it hard to transport and store. Gold also requires verification and intermediaries to ensure its purity and authenticity. Gold can also be confiscated or restricted by governments, as it happened in the US in 1933. Last, other cryptocurrencies. Other cryptocurrencies may have some advantages over Bitcoin in terms of speed, scalability, or functionality, but they are not as durable, scarce, acceptable, or fungible as Bitcoin. Many cryptocurrencies have unlimited supply or inflationary models that reduce their value over time. Many cryptocurrencies also have security or governance issues that make them vulnerable to attacks or forks. Many cryptocurrencies also lack the network effect and adoption that Bitcoin enjoys. Therefore, Bitcoin is arguably the best store of value among all existing assets. It combines the best aspects of both gold and digital currencies. It's widely accepted, liquid, scarce, divisible, portable, and durable. The only thing that it is lacking is durability over time, as it has only existed for 12 years and its future is still uncertain. However, given its track record and resilience so far, many investors are confident that Bitcoin will continue to be a reliable store of value for years to come. Reason number 3: Bitcoin is a catalyst for innovation. The third reason why Bitcoin is still the king of crypto is because it is a catalyst for innovation. This means that it inspires and enables new ideas, technologies, and solutions that can improve various aspects of society. Bitcoin is not just a currency, it is also a platform for innovation. It is based on blockchain technology, which is a revolutionary way of storing and transferring data in a distributed and decentralized manner. Blockchain technology has many potential applications beyond cryptocurrencies, such as smart contracts, digital identity, supply chain management, voting systems, healthcare records, and more. Bitcoin also paved the way for other cryptocurrencies that offer different features and functions. Some examples are Ethereum, which enables programmable smart contracts, XRP, which facilitates fast and cheap cross-border payments, Dogecoin, which started as a joke but became a popular meme coin, Polygon, which provides a Layer 2 solution for scaling Ethereum, and Love Hate Inu, which is a new trend in crypto gaming and NFTs. Bitcoin also stimulates innovation by creating new opportunities and challenges for various sectors and industries. For example, Bitcoin has disrupted the traditional financial system by offering an alternative way of storing and transferring value that is more accessible, inclusive, and efficient. Bitcoin has also created new markets and business models for crypto exchanges, wallets, mining, lending, staking, and more. Bitcoin's innovation also attracts talent and capital from around the world. Bitcoin has a vibrant and diverse community of developers, entrepreneurs, investors, researchers, educators, and enthusiasts who contribute to its growth and development. Bitcoin also attracts funding and support from various institutions, corporations, governments, and celebrities who recognize its potential and value. But perhaps the most important aspect of Bitcoin's innovation is its positive impact on the environment. Contrary to the common misconception that Bitcoin consumes too much energy and contributes to climate change, Bitcoin actually acts as a catalyst for positive change in the energy sector. Bitcoin's energy consumption is not wasteful, it is necessary to secure the network and ensure its decentralization. Moreover, Bitcoin's energy consumption is transparent and verifiable, unlike many other industries that hide or underreport their environmental footprint. Bitcoin's energy consumption also encourages the transition to renewable energy sources, such as solar, wind, hydro, and geothermal. Many Bitcoin miners are located in regions with abundant renewable energy or use excess energy that would otherwise go to waste. Bitcoin mining can also help balance the grid by providing flexible demand response and storage solutions. By encouraging the transition to renewable energy, driving energy efficiency improvements, and promoting decentralization, Bitcoin can be a catalyst for a more sustainable and resilient energy system. Bitcoin is more than just a digital currency, it is a revolutionary phenomenon that has the potential to transform the world. Bitcoin is still the king of crypto, and why it matters because of its strong network effect, its trusted store of value, and its catalyst for innovation. Bitcoin's network effect makes it the most valuable and useful cryptocurrency, as it benefits from its large and secure network, its high recognition and acceptance, and its positive feedback loop. Bitcoin's network effect also makes it hard for any other cryptocurrency to challenge or replace it as the leading digital currency. Bitcoin's store of value makes it a reliable and attractive asset, as it preserves its purchasing power and protects against inflation and devaluation. Bitcoin's store of value also makes it a hedge against economic uncertainty and instability, as it outperforms traditional assets in times of crisis. Bitcoin's store of value also stems from its scarcity, decentralization, and immutability, which ensure its integrity and reliability. Bitcoin's catalyst for innovation makes it a source of inspiration and enablement for new ideas, technologies, and solutions that can improve various aspects of society. Bitcoin's catalyst for innovation also makes it a platform for innovation, as it enables various applications beyond cryptocurrencies, such as smart contracts, digital identity, supply chain management, voting systems, healthcare records, and more. Bitcoin's catalyst for innovation also makes it a positive impact on the environment, as it encourages the transition to renewable energy sources, drives energy efficiency improvements, and promotes decentralization. These are just some of the reasons why Bitcoin is still the king of crypto and why it matters. There are many more aspects and nuances to Bitcoin that we could not cover in this video, but we hope this gave you a good overview and appreciation of this amazing phenomenon. If you enjoyed this video, please hit the like button, subscribe to the channel, and turn on the notification bell so you don't miss any of our future videos. Thank you for watching, and we'll see you next time.